Welcome to this financial podcast. It is May 25th, 2018, and it looks like our target was hit. In the last trade that we were in, it was Ford Motor Company. We had a target in the 1160 range, and as you can see right here, it was hit. As soon as it was hit, it came down and came back up again, so it looks like it was a good trade. We made around 8% on this trade in a short period of time, so definitely a solid trade for us. And now I want to talk about something new, and that's Johnson & Johnson. I'm noticing that this stock has really come down substantially, and it's making what I call a triple bottom. Now, from this area to this area, this is several months, so it is a wide triple bottom, but as you can see, it came down very strong this way. I mean, in a short period of time, it lost a lot. It really came down, and then it started to come back up again, started to rally, down, up, really choppy. It started to tighten over here, making this kind of coil spring formation, and then bang, it came back down again. However, the support seems to be holding, and as soon as it hit in that 120 range, it started to come up again. And now it's coming back down again, and here's the key. What is it going to do now? Now, I think if it comes back up again, if we see a movement at around the 123 range, something in that area, if it moves into that area after it's made this move right here, I think this stock may be in for a rally, and even a dead cat bounce could be really good depending how hard it bounces. And it could be a really interesting opportunity because fundamentally the company is sound. I mean, its earnings are coming out good. I mean, it's Johnson & Johnson. This is one of the most well-known companies in the world. Its market cap as far as pharmaceutical companies is the largest, and they're a lot more diversified. They don't just sell drugs. They're very much into a lot of over-the-counter stuff like oils and powders and baby products and all kinds of things that they make. So it's a very large company, and they're very diversified in the healthcare industry. So I like diversification, and the reason why I'm saying this is because this has not been a good year for the healthcare sector. The healthcare industry has not done well. A lot of stocks in this industry have gone down, and that includes the big three: Johnson & Johnson, Pfizer, and Merck. So that's also been a problem for this stock. It's weighed the stock down because the general industry is just not doing well. But I just see a good bottom here. Now, this stock is not undervalued, but it's also not overvalued. I mean, the PE is in the 20s. That's not great, but it's not bad either. I think it's actually lower than the average in the S&P. So we could see a rally in this stock. Like I said, it's not breaking through this support. It's trying to do it 3 times already, and if it fails to break through this time, we could see a rally. So the plan here is to see if it goes into the 123 range. If it does in the next few days, I would buy on a limit somewhere around the 121, 122 area, but I have to see some strength before I'm a buyer here. I don't want to buy something that's potentially going to break through the support, because if it breaks through support, we could see more movement to the downside. So I'm going to keep an eye on it and see what it does. Like I said, if it rallies back up in the 123 level, then I'd be entering at the 122, 121 range on a limit. So there you go. That's what I'm looking at next right now. If you were involved in the Ford trade, it really worked well for us. And just make sure to subscribe to find out what's coming up next. Feel free to leave comments. Please like this video, and thank you for tuning in.